And if you keep loading in accounts, that's a big red flag. In my opinion, I think that's probably the biggest red flag, because you know what's going to end up happening is that the more you blow accounts and then you reload because you're kind of pissed, but at the end of the day, you're not getting any payouts. In a couple of weeks, you're gonna start to feel the pain and the pressure, and that's gonna affect your trading too, right? And it's gonna get deeper, deeper on.
Whoa, what are those?
The laptops for the new hires. We need to ship them out.
Most important thing. It's very important, guys. It's very important. That, in my opinion, is the biggest, the single most important fact that we have to all remember as a trader. You know, it's scary. It's really scary, guys. You know, so you're trading one or two. Justin, right? Are you streaming again tonight? I don't know. I don't know, bro. I don't know. Depends. Depends. But yeah, I mean, I felt like shit this morning. I'm not gonna lie, guys. Yeah, I didn't feel good at all today. So we're getting a little bounce, guys. We're back into the pivot. Now, are we going to get a continuation? Because we never really got any sort of a continuation here today. So I'm kind of going, okay, well, maybe we chop. We try to...
Cool. Oh, right. Hey, what's up, Jimmy? Is the sound too loud? Can't tell. It's too loud. No, it's not too loud. It's like good in the background, right? It's loud for me. I'll just turn it down. That works. Alright. Can you guys still hear me? But shorts should go. What charts should we go over? Very interesting. This one was just crazy.
Granger knows that if you're a school custodian, cleanliness is your top priority. That's why you
Okay,
can
I like
rely
how
on
it's
Granger
going.
for
It's
a range
going
of
well.
cleaning products and equipment, from disinfectants to floor scrubbers. Granger, for the ones who get it done.
The
The 2026 Chevy Equinox is ready for your daily drives, weekend getaways, and everything in between. Plenty of cargo space, plus a big touchscreen that keeps all your tech right where you need it. It's more than an SUV. It's your Equinox. Chevrolet. Together, let's drive.
Back. It's interesting. We need a blow off top. Interesting. Okay, what are we looking at? You can show me what you're looking for. Yeah, absolutely. So you can do this on any platform. So trading view. So what I look at, like options chain, you really want to see flip this over. Alright, I think that's better. So when you're looking at, let's just say, it's not showing them all. So these are end of day options. Well, this technically would be more, so this would be, but it's not going to have the correct strikes because they had to just killed it because it's after yesterday. So what I really look at, I just want to see the open interest. So usually when it's active, you can see the amount of contracts that are open. Like here, I can show you that. So this is not, this is time and sales. So charts. See options chain on here. Not sure how to use a desktop version. But anyway, what you want to look at is the open interest. So when I'm looking at it, I just see where the volume is, but I just pair that up with, this is kind of the important part. So if you use, the important part is to use it with gamma levels. So when I go here, where there's a lot of gamma is usually where the price will either repel or attract to. So red, it actually is attracting to. So it's a little confusing when you read this because you think, oh, it's going up, it should go green. Green is actually like the wall. So this is where it's either going to be support or resistance. Red, it's like attracting. So this is Qs. So basically it's just trading in this range, it's consolidating between attracting to 19, so it's on the lower end of the range, and then trying to go through 20. So right now it's at 20, 25. So it's probably going to have 20 now as a base because it went up. So now support, resistance becomes support. Does that make sense?
Oh, you can't hear anything I just said. um, okay, so okay, let me see here. So I look at the options chain. So basically what I'm doing with the options chain, I'm just looking at open interest. So wherever there's like today, I don't know if I took a picture of it. Oh, did that take me out? Oh, it's that slow. Wow. So this looks like bull flag. Okay, so this trade today, I'm gonna send it in the chat, and I guess I can pull it up, right? All right, so okay, if this makes sense. Okay, so did you get it in the chat? So basically, when I'm looking at it, I mean, this is minutes after the open. So if there's a dip, like it's just shorts are getting squeezed. That's what this is. So eventually there's going to be so many people that just go into the rally. There's going to be a lot of volume and it'll just be like a blow off top. That's when you want to go short, but you don't want to go short till then, really. These premiums were fucking killed today. Like I actually lost money on this trade because I held it too long and then it wasn't, well, I took profit, but it still could have been better. Could have been better. But do you see here? Let me see. I can't. Okay, so volume's all kind of the same, but there's a lot going towards that. So open interest 11,000. That was like just really a lotto ticket for me. But look, 6,000, less than 2,000. This is on the call side, and they were down. So between that and then the gamma level, so I knew if it was holding, which it was holding, that it probably would just continue, but it just, today sucked. It didn't do what I needed it to do, but it showed it was weak. So like what happened all day here was really just bouncing around. Like this is just kind of building out a bull flag, I guess. But it keeps hitting these, like if you see a doji, usually is where it's going to go, is what I've noticed. So I use this feature here. It just maps out all the little dojis. So doji's indecision. So okay, it's not sure if it's going to go up or down. So if it closes above it, it's probably going to go up. If it closes below it, it's probably going to go down. So and this is a trade I was in, and then I lost money. I was just short, but I should have gotten out here because it was below it. That was like the dead giveaway because it rejected the doji and then came straight back down, tried to make higher, made a less higher high. Or wait, yeah, it made an equal high, 18.18, and rejected sharply. What time was that? Oh, that was 9:30. So at the open, Yeah. So like, and it makes sense because whatever time frame you're looking on. So usually I use this for scalping on a 5-minute time frame, and well, this red line is point of control. So basically, there's just a lot of transactions. So anytime there's a buy or a sell, it's volume. So we don't know if it's a, you know, but we do know if it's positive delta or negative delta, if it's more selling, just because it's a one-to-one transaction. So this volume is really just buying and selling, buying and selling, buying and selling. But there's most transactions here. So on this node, it is now acting as support. So I'm just going to keep this. Wow, it's at 7. This will probably go, well, if it closes, this was a fake out. This one, reverse, this one. And all these were positive, curling up. But it also is like, this is indecision too. If the EMAs don't know if they're going up or down, and they need to, I guess you just got to wait for it to break out. And then this is volume footprint. So yeah, that's all I do. I just see, well, I look on both sides though. I look on both sides of the market. What was weird today, and I should have known this as a precursor, is that, so when I first bought these, you know, it spiked up and I sold it for, I bought them at, I think 25 cents a contract or 23 cents a contract. And then I sold half of them at 55. Like, greed is what kills. So I try to take profit if it's at 100. Like, it just doesn't make sense. Like, if you doubled your money, why wouldn't you take at least half of that? So just strategically, I think it works doing that, because on 0DTE, the theta, or the rate of decay, will just be so high, because I mean, it's expiring that day. So I mean, it needs to go in direction. It needs to also go with force. So like, if also the IV, you know, people are saying, oh, it's going to the moon, it's going all-time highs, and then it doesn't, or it doesn't fast enough on a 0DTE, it can kill the premium of it, which it was doing this shit all day. And then when it chopped around, it's just killing time until it dies. But anyway, this made a much larger high, and it still is at like 50 cents, which when I sold these, it went all the way up to 70 cents. So if it started from 20 cents to 70 cents, you know, went, let's just say, you know, three points, then came back down, went another 3, total of like 6-7 points, and it still is the same price. It doesn't make sense. Yeah, too long, and it just kills the premium. So when you're holding too long, it's more the theta, and the premiums are just dying. So like when I'm buying contracts, if the premiums are going up, then I know, okay, more people want to go in. That's why they're paying a premium. I feel like I should watch my positions more. But yeah, with that doji, I think helps a lot. Oh, it took me out. Oh, good. Took some profit. All right, so I am trading theta's decay. Yes. You know what? I gave my coworker a book.
Mix up your cat's mealtime with the Meow Mix playlist.
I had papers that when I first started learning about like Greeks, I was just reading, but can't remember where those are. I'll find them and I can put them in the chat. I made a
Learning why
script
cats
on
ask more by
TV.
name? Tap the banner to try now.
Oh. Nice. Post in the chat, please. Expect RLCFO. Expected moves. I think expected moves are very good. Okay. So that's a script that I wonder how it's private, huh? This one. So I like this with the expected moves. So this just plots them out. I'll have to send this in the chat. Can't remember this. How do I find it? I am not very tech savvy, so sometimes when I'm trying to code, it doesn't really work out. It's more like copying and pasting for me. Oh, you use the expected moves. Yeah, Mike's great. All right, so yeah, I feel like everybody just puts it in and says do it and has no idea. You know, these bots could be programming viruses in our computer and we have no idea. Yeah, I like this. So what do you guys think about the market? Hope not. Oh, with the viruses, yeah. Yeah, I hope not too. But I mean, I don't know. I feel like everybody's information is everywhere now. Yeah, I like this node building here. Just a 1 minute node. Yeah, it was a shit show, wasn't it? You know, I was not happy with, I just made a bunch of mistakes and then I went on tilt. I went on tilt because I know that all these levels are going to be taken out. Probably best. I mean, it's so confusing. Like, I know it's going up, but I want to be bearish on the market just because it's so low that, I mean, it's so high, people are going to push it lower eventually. Because you're either bearish because you don't have any skin in the game, or like it influences my trading too. Like I was bearish when I was trading futures, but if I'm bullish trading options, and I'm like, it fucks me up. Like I can't go both, you know, one, the direct trend, which should be bullish, but these pullbacks today were very sharp. Oh yeah, like yeah, it's confusing sometimes. I should have added there. It's right by the 5 EMA. That's okay. I have, it's really 4. How many did I have? I had 9. Don't need that anymore. Futures, I think, are easier. Options fuck me up because you have to be right with not just the direction, but the timing. Like you have to time it so perfectly right. Yeah, I think my biggest mistake is I should be trading like a few days out. Because usually, and I have a note here, usually between 1 and 2, there's manipulation in the market. So I have manipulation 1 to 2 p.m., 12:30 to 2. It's kind of been like coming in and out of lunchtime. I wonder if we eat earlier or later in the summer, because you know I'm right across the street from the New York Stock Exchange. I should really just look to see around 11 to 1 when people are coming in and out for like lunch, because I doubt all the traders are back in their own lunch. So I should see, or I could just ask the guard, I suppose. What time do people go to lunch? Huh. That makes sense. Yeah, that makes perfect sense. 11:45 till, yeah, it makes perfect sense to 2. Yeah, 2, like top traders are seeing the opening and they're seeing the close. So they don't really care what goes on between. It's just the open and the close. So how it started and how it ended. I don't know if I like this. This is kind of...
Hey honey, it's Mom. Did you know if we switch to Verizon, we can get 4 phones for $0 plus 4 lines for $25 a line? Call me back. Me again. That's just $100 a month for 4 lines on unlimited welcome, plus 4 phones. No
Really?
needed.
Oh, that's interesting too.
It's Mom, America's
Let's
best
see.
network, Verizon. That's the one we're talking about. I'll send you text.
America's best network based on RootMetrics best overall mobile network performance.
So if there's like a slight change, I look at the 15-second and 1-minute chart. It's kind of coming up, but hmm. 5-minute. It's kind of like a... This is kind of like a bear flag if you think about it. Let's see the volume. Yeah, I like the 200 in VWAP. I think VWAP is very good for, just really seeing overall direction. This is my VWAP in white. It's above it. Yes, I want to add. This is really calming music. But this is also kind of like a bear flag, a decision. Yeah. But I mean, it's far enough away on the 5-minute. Yeah, that's what I do. I like what I've never heard anyone say. What I like the 195-minute chart on the cues, because an actual day is 195 minutes, because it's not from 9 to 5 or it's 9:30 to 4. So the times for the charts are 195 minutes. So it's 295 minutes. So that on, you know, these are half days. 1 day, 1 day. I always look for like these spaces. I feel like they have to fill, or at least come close. So I mean, it's either going to test up here or down here. So it's either going to test the 22 level, which I think, I mean, it's closer to 22 than it is to 14 or 15, right? It's close to 21. All right, but yeah, I always used 195 minutes, so 195 minute chart for half day. Yeah, because it's, yeah. Yeah, 195 minutes exactly. Oh, wow. I need water. But look at this RSI, how fucking overbought we are. Like, this is such an extreme. It'll probably go to 80. I don't think there's enough like manic buyers in the market that are like just trying to buy. Right? It's not yet. That looks good. Where's my average? Under 7. Good. All right, I like that. I mean, it's showing strength, right? It's coming back up. There's no wick on the bottom. There's no wick on this bottom. So it's kind of building up strength here. Well, at least on a 15-second. All right, so now I have 88. $99. All right, sounds good. All right. Needs to get above this 15 level, doesn't it? That's good.
Grainger knows that if you're a maintenance supervisor at a manufacturing facility and your machinery isn't working
I don't like
right,
this.
you'll understand what's wrong as soon as possible. So when a conveyor motor falters, Grainger offers diagnostic tools like calibration
Oh,
kits and
wow.
multimeters to help you
I
identify
actually
and
do
fix
like
the
that.
problem. With Grainger, you can be confident you have everything you need to keep your facility running smoothly. Call 1-800-GRAINGER, click Grainger.com, or just stop by. Grainger, for the ones who get it done.
Too late. That was wow. This S&B Capital, I don't know about their little course or whatever they're, I don't know. Has anyone ever done that? They have some pretty good videos. I like them, but I don't know about paying them to trade. Maybe trading, you know, their software, but I don't know. It doesn't seem. To me, worth it to me. Wow. Getting tired. Took out the highs, I re-added. I mean, it's building a base. Right? $21 seconds. I want to buy some of this. Oh, where's my buddy? What's his name? Steve. I like this guy. This guy's great.
You've been trading options for years and you're still not consistent. It's not because your lack of intelligence, it's because of your approach. What if I told you there's a way to structure your portfolio?
So this is a great strategy here. When the 15 reversed the sell right here, it correlated with the 60-minute time frame, putting the GLDs, the underlying ETFs, in a sell disconnect. Now, watch this. When the gold futures reversed the sell here, okay? When the gold futures reversed the sell on the 30-minute, right here, you can see here the 30s and then the 15s reversed the sell right here. So now the GLDs are in sell mode on the, the gold futures are in sell mode on the 15 and 30. What do you look to do? You short the bounce on the 15-minute time frame. We got short this above 47.03 all the way up. People were scaling in. And look at this. This is a pattern. This is a correlated pattern, okay? Please join me tonight from 8 to 10 for the Asia session sponsored by My Funded Futures. I'm hosting it again every Monday through Thursday from 8 to 10. So be there. We cover the 5 assets: S&P, Nasdaq, gold, oil, and silver. Also, if anyone would like a 5-day free trial to my live stream, please text me your full name and email. I give it out every Monday. You have access to my live stream Monday through Friday from 8:30 to 4. My Discord chat where you can communicate with me. And if you like it, then you go to the Complete Trader, and it's 4.5.
Okay.
All right. So again, 914-500-7484. If you would like to join, I get a free access to my live stream every single day at sktrading.live. All right. All right. So what do we see today? It's all about Nvidia. Everybody's all bulled up here. The stock is up another 4%. Right. We saw Broadcom up 5%. Beautiful patterns on both. We saw Coinbase, Bitcoin, monster pattern. Bitcoin above 81,000. Monster patterns on Bitcoin. We saw the chip stocks not acting that well. We saw great shorts on SanDisk on the sell disconnects. We saw the Russell very strong. The 30-minute time frames. Again, we've been in this monster trend here. But nobody's gonna do anything until Tuesday when Nvidia's earnings are gonna come out. Everybody's betting the Nasdaq to go to 32,000. The last the QQQs are up $60. Okay, in 6 weeks. $60 in is it 6 weeks? Let me see what I wrote here. Hold on a second. I think it's the Qs are up in 2 weeks. $60 in 2 weeks. Oh, yeah. So unbelievable move here. All bold up here. We saw Intel not acting right. Tesla not acting that right here. Market looks tired. We've got this monster big push up here. But again, it's all about what? It's all about the chips and AI stocks, and that's exactly what's fueling this market on the way up. Now, today we saw big buy reversals on Microsoft on the 30-minute. Great pullbacks. 2 great pullbacks on the 15. We saw monster reversals on Broadcom. Beautiful long. I caught a beautiful long on Broadcom. We made about 4.5, 5. It ran another 4. So great pattern there. We saw the Russell really great pattern. Gold monster shorts in gold today. The GLDs reversed to sell on the 15 and the 60-minute time frame. I'll show you the great pattern on gold. Also, the USOs reversing to sell on the 30-minute time frame.
I would love there.
But again, the number one pattern of the day, really truly, was the pullback on Broadcom, the pullback on Nvidia, the pullback on Bitcoin, Coinbase, the pullback on Bitcoin. These are great patterns here.
Risk to reward, right?
So what you want to really do here, when you're in this positive trend, in this monstrous trend, and by the way, AMAT reported earnings after the bell, was up 33, only up 19 now. Cisco, another big catalyst for the day, pushed up, was trading above, up 22. When I got in, it was only at 15, 16. I tried to short it.
Try to understand this guy's charts.
But again, so this is Broadcom today. Let's look at Broadcom AVGO. Very, very strong, as you can see. This is the pullback here on Broadcom on the 60-minute time frame. I love when the MACDs are crossing positive from below the pivot. You can see very bullish MACDs here. Very bullish MACDs on the 30. You can see the 60s. Here's the beautiful pattern coming in. We gapped up here, so we're already bullish on the 15. You can see the spike up. I love when you get this big pencil up and then you get the push down here into these positive MACDs, especially on the 15-minute time frame. So you get the push up here. You can see the high 34. It pulled in beautifully. We caught this beautiful long on Broadcom off the 5-minute. Once everything reversed, and then you can see this is a monster bull flag right after the opening. We actually look at this monster bull flag. We were buying this under 27.5. Boom, it went to 30. It dropped again. When you see the oversold condition like this into a positive MACD, rising ADX on the 5, big buying pressure, monster ADX rising on the 30, monster buying pressure on the 15. All you got to do is just say, back up the truck, Gus, and it was right there. Okay. Also, if you look here, once you got the double blue buy, the 5-minute time frame correlating with the 15, 30, and 60, you take another long here. Here's another long on Broadcom. Look at this. Never look back. Boom, right up there. Look, 4 or 5 points. Then what happened? We got the pullback here on the 15. But the real story, when you get a big move like that, is the 30-minute time frame. We got long here. Beautiful. I said like 31. And this is a pattern. So you look to say 1, 2, 3, 4, 5, 6 bars. Boom, kaboom, $11 on Broadcom. A monster pattern, oversold into an oversold condition. ADX rising on the 60. Monster buying pressure. You can even see when you got the oversold condition on the 30. You can see how the dots, the yellow dots, did not even near look like it was going to reverse to sell. Nvidia, another great one today. All right. Now, Nvidia, every time it pushed up here to new highs, you see the negative MACDs, how the market was really truly affected there. And then you got the big push up here. You can see the bigger time frames were all in buy mode here from the day before. Now, we really didn't get any type of a decent pullback here, even on the 30-minute time frame. So we'll see what happens. But the earnings are coming out on Tuesday, so I'm staying there. I took a nice little short on NVIDIA. I covered a little bit too quickly. It dropped another $1, but I'm happy. You know, when you're shorting new all-time highs, you got to be very careful in scalping the shorts like that. Also today, SanDisk SNDK. If you see SanDisk is about to reverse the sell on the 30, but we got the big sell here on the 15-minute time frame. And when you got the sell on the 15, it correlated to sell on the 60-minute time frame, as you can see right here. So now that puts you into the condition which is a sell disconnect. And when you have a sell disconnect, then what you look to do, you look to short bounces on the 5 or the 15, and here you go. You can see here's a bounce here on the 15, here's another bounce on the 15, and then you got what's called a double red short. A double red short is one of my strategies that gives you the ability to look at the 5-minute time frame, which correlated with the 15 and 60, so that's a sell disconnect, or even when you're in a sell condition when all 3 time frames are negative, 15, 30, and 60. And what do you look to do? You short the first bounce here. Look at this. This is a Picasso. 98, boom. Look at that. In 4 bars, it dropped $23. An absolute Picasso. Negative MACD on the 5. This is a gift. Monster short. Monster short there. Okay. Also, Bitcoin reversing to buy here on the 60-minute time frame. Monster pattern. Again, when these MACDs are crossing up from below the
I haven't seen.
Love that. What do you look to do? Well, you buy, and especially if it correlates with the 30, you buy the first pullback right here on the 15, the second pullback here on the 15, and then the 30-minute time frame should be setting up. Monster long. Oh my God, this is some bull flag setting up here on Bitcoin for tonight. So again, because Bitcoin trades all night long. Coinbase.
Bull flag. Let's look.
60-minute time frame now reverses to buy.
Yeah, it is.
Above the pivot. So what you do is you take shorts on the overbought condition. You can start shorting this above the 20 level, the high
Touch.
22. You got kaboosh down to 15. But again,
This is probably gonna.
first time you see the pullback here. This is the first pullback on the 15 right here. It traded down to 15, so $1 lower, and then ripped right up back up to 20. So about $4.5, maybe $5.5 on that, and that was a pretty damn good long there. But again, what the moves here? Last but not least, the GLDs. When you see the GLDs in the sell mode on the 60, the 15's in the sell mode, and guess what happens when the 30? Let's put the 30 over here. We'll put the 30 here. The 30 reverses to sell, and what do you do? Boom! Here it is. The 15's. Look at that. That's a Picasso. The 30's reverse to sell at 230. Now, but you're already in a sell disconnect with the 15s and the 60s. Well, then what's what happens? You're in a major short there. But in this situation here, when the 15s reverse to sell right here. So this is a great strategy here. When the 15s reverse to sell right here, it correlated with the 60-minute time frame, putting the GLDs, the underlying ETFs, in a sell disconnect. Okay. Now, watch this. When the gold futures reverse to sell here, okay. When the gold futures reverse to sell on the 30-minute right here, you can see here the 30s and then the 15s reverse to sell right here. So now the GLDs are in sell mode on the. I'm sorry, the gold futures are in sell mode on the 15 and 30. What do you look to do? You short the bounce on the 15-minute time frame. We got short this above 47.03 all the way up. People were scaling in, and look at this. This is a pattern. This is a correlated pattern. Okay. Whereas the underlying ETF and the continuous contract went into sell disconnect, and you had the negative MACDs on the 15, the push up to 47.07, never look back. Dropped over 50 points throughout the day. Look at that, 47.07.03, 1, 2, 3, 4 bars, boom, $24. All right. Okay, that's how you do it. That's how you do it. All right. When I get back, I'll tell you what I expect for tomorrow. So for tomorrow, let's look at the underlying ETFs. I'm not going to be in tomorrow. I have to speak at an event in Tampa. But if you look here at the 30 and the 60-minute time, I'll put the 30 here. Let me just get back to the 30, and I'll put the 60 over here. You can see this is exactly what happened today. We got this beautiful, beautiful pullback here, and this is where the long happened, 746.31. We ripped here about 17 points on the S&P. But again, look, the bottom line is we may get one more push up here off the hourly. We did hit a new all-time high. I believe the S&P hit this 75.38 level, 39, and the Nasdaq got up to the, I believe, the 730 level. Where's the high? 730, 750 or something like that. But again, if you really look at the tail here, here, you're 25. I mean, this is ludicrous. Since we got this move from 6,300, we haven't gotten one pullback on the daily. A little bit ridiculous here. The gamma guys are really fueling the market, but overall, I think it's just really important to understand how the markets are really structured. I think that there's a cabooshin coming, but again, I think it's going to be after options expiration / the end of when NVIDIA reports earnings. So again, a great day for our community. Caught a lot of great shorts early in the morning. Caught a couple great longs. Actually, one long we got. Some people caught about 130 to almost 170 on the Nasdaq. Great day on that. But with that, I just think overall, if you're trading the market, just very, very careful if you're scalping or if there's pattern trades, and I identify either or. That's what makes the difference, being able to identify the pattern trades versus the scalp trades. So again, I showed you a bunch of great pattern trades here tonight on the Bull, the Bear, and the Ugly. All right, when I get back, I'm going to talk to you about the mindset of trading. So as a great trader, the most important thing is the mindset. Again, like I told you this a number of times, when I walk through that door every single day, my mind's completely blank. People think I'm joking when I say that. I'm not. I'm being honest with you. I come in, right, boom, I look at my bigger time frames. When the Nasdaq and S&P pushed up this morning to new highs, we faded it, and boy, did they drop. 150, 170 points on the Nasdaq, I think 15 to 18 points on the S&P. Being a great trader requires you to be almost like an athlete. You have to train your mind. You have to train the way you see things. Being able to look at a stock and look at 3 time frames. If you're looking at index futures or commodity futures, to look at the underlying ETFs when you're trading. This is all part of being able to be great in a great industry, right? And again, you are your own. You create your own destiny, and that's why I love doing what I do every day and trying to help everybody to become great traders. 44 years come this August 1st. Trade Live Capital, and I've traded nearly 2 billion shares in my life. So it's a really great honor for me to do this. I love helping everybody. But the mindset of a great trader, no revenge trading. There are rules. Put stops in, even if it's a mental stop. And so you don't like putting stop orders in. Yesterday, this times I put mental stops in. Okay, that's it. Boom, just buy them. Okay, just boom, just sell them. I'm out. Next, off my mind. Next trade. I don't look back. What could I have done differently? I'll look at it tonight. Okay, but again, having the mindset, being able to do the work. Don't beat yourself up if you have a bad trade. It's just a trade. There's about 15,000 trades a day. I'm just making it up. Whatever, there's more than that. But I'm just saying, you don't have to beat yourself up. You don't have to get down if you have a losing trade or you get stopped out. Next, right? You just go with the flow, loosey-goosey, keep yourself focused, and that's what's really going to make you win. And that's what's really going to make you into a great trader. All right, thank you for joining me tonight on the Bull, the Bear, and the Ugly. Please hit the subscribe button. Please leave a comment. If you'd like to join my community of traders from all around the world, please go to sktrading.live and please hit the complete Trader, and I love to see you each and every day here at 8:30 to 4. If you'd like to follow me on social media, please follow me on official Stephen Kalajian on X, Instagram, TikTok, and LinkedIn. Again, if you'd like a 5-day free trial, or if you just want to text me or call me, have a question, my cell phone number is 914-500-7484. If you'd like a 5-day free trial, please send me your full name and email. Also, if you want to follow me tonight on the My Fun the Future YouTube during the Asia session, we do 10 giveaways at 9:50. It's really fun. It's a great 2 hours. I hope to see you there. Thank you again, everybody. God bless you. God bless our troops, and God bless the United States of America. I'll see you tonight.
This guy's good. Hmm. Well, I made money and then rebought. Should have. And then I'm breaking even on that. Yeah, I should just stick to the one product. Took me out. So I basically gave back 100. It's all right. Hmm. Hmm. Let's look at it closer. Yeah, that looks like it's breaking down, Steve. To me, at least. This 29.30 level. Needs to hit that. Didn't hit. It's losing some momentum. Yeah. It's good. Can't help myself. Guess now I need some background music. Do I have Audible? Should listen to Audible. I fell asleep listening to Audible. 11 credits. I never use this. Took me out. Damn. Took me out. That would have been a good place to buy. I mean, look at that. Got bought all back up. Made me pay a premium. Reject multiple times. It's rejecting and testing. Trying to be disciplined. Very tight stop, no mental stop, hard stop. Okay, yeah, that's max contracts I want to trade. Glad I went back in. I should bring this up. At least to there. Right, okay, I'm happy with that. All right, this is what I was listening to.
Of the market. Once the emotional charge is gone from the trading process, intuition will become more trustworthy. And this will probably also come at a time when the trader has finally been exposed to enough market patterns to have begun to develop some valid intuition. For most developing traders, the most important points to remember are as follows. Intuition is real, but it is not special. Everyone who has interactions with the market quickly develops some degree of intuition, so the presence of intuition is not a trading edge. There are far more people who have intuitions about the market's movements than there are profitable traders. Also, realize that intuition relies heavily on heuristics, so it is absolutely critical that it be trained correctly. Last, realize that it will often not be possible to walk through logical steps that fully explain your intuitive conclusions. In fact, intuition will be at odds with logic and reason at times,
I need another.
creating a
I should
dissonance
just get 1,000.
that the trader will have to resolve. Intuition is fallible and will sometimes be wrong, so it is critical that all intuitive impressions are subject to rational review and evaluation. Numbers to leave numbers. Josh Waitzkin uses the phrase numbers to leave numbers or form to leave form to describe his experiences building mastery in both chess and the Chinese martial art Taiji Chuan. In both disciplines, students typically spend many years
I am
studying
going to
fundamentals
sell
and basics,
at least one.
focusing on the building blocks of mastery. The chess student may begin by studying endgames, where there are only 3 pieces on the board, and eventually progress to memorizing full games of grandmasters. The novice martial artist spends a lot of time learning to do basic things, like standing and shifting weight from one foot to the other. The journey from fundamentals to mastery is a long one. True mastery does not come until many hours of work have been put in for many years, and until fundamentals have been assimilated on an unconscious level. Students may show aptitude early on, but it takes a long time and a lot of hard work in the right environment for even the most talented students to reach their full potential. At the end of this work, intuition grows as a natural result of everything the trader has done to understand the market. All statistical and quantitative studies, every experience in every trade, and every contemplation of market action are folded into a holistic understanding that is true market intuition. Flow. Have you ever been so completely engrossed in an activity that you become lost in it? Maybe you had no sense of time and hours seemed like minutes. You forgot what you were doing, and even the normal scattered wandering of your mind stopped, and you were completely focused on the task at hand. Chances are, whatever you were doing, you did well, even though you might not have been able to explain exactly how you did it. This state of flow is a common thread in elite performance, regardless of the context or the field. The professional athlete who sees the whole field at a glance and effortlessly seems to be at the right place at the right time. The professional musician playing an hour-long concerto from memory with effortless perfection. The line cook in a busy kitchen, balancing completion of a dozen dishes at a time for hours on end. The video gamer, sitting in front of his screen, or the religious mystic, sitting on a wooden floor praying for days on end. These experiences are united by a common state of mind. Mihai Csikszentmihalyi was the first psychologist to seriously investigate this state, though it has certainly been a part of the human experience for millennia. He has identified a few commonalities to the flow experience. We are completely focused and completely absorbed in what we are doing. There is a sense of great inner clarity. The task must have clearly defined goals, so we know what must be done and how much progress we are making toward accomplishing those goals. Feedback is immediate and direct, so that our activity can be readily adjusted to match the task. Though the flow experience is connected to complex tasks, we know that our skills are adequate. We are up to the task. There is a sense of easy self-confidence, sufficiency, and no worries. There is a loss of our sense of self. We may perceive ourselves becoming one with the task, or even lose sense of the boundaries where our consciousness ends.
Amazing.
We lose sense of time and, in some cases, have a feeling of standing outside of time. This, together with the loss of self, sometimes is described as an expansion of consciousness. It feels great. Actually, that is a dramatic understatement. Many people report the flow experience as being one of sheer
Okay, it
ecstasy.
hit where I
There is an
needed to.
ineffability to the state. Many
Yeah, I always
times we
set
are simply unable to
alerts.
find
I think
words to
alerts
convey
help.
the experience, and it defies all explanation. Because of this, activities that produce flow become their own intrinsic motivation. We are driven to excel in these activities simply to achieve the state of flow. Flow becomes its own reward. How to get there?
Hey,
In
my
the flow
love.
state, we are supremely competent. Someone observing our performance would remark that we make a complex task appear effortless and easy. This, in fact, is one of the attributes of true mastery in many disciplines. Elite performers do their best work in the flow state, so it is worth our time to consider the nature of this state, how to get there, and how to guard against events that could jeopardize the flow experience. To this end, Csikszentmihalyi, Abuhamde, and Nakamura identified 3 key conditions that must exist before flow is possible. I have added a 4th condition based on my own experience. The presence of these conditions does not guarantee that flow will be achieved, but without them, it is not possible. 1. The activity must have clearly defined objectives and goals. 2. The task must offer clear and immediate feedback. 3. The performer must have confidence that his or her skills are matched to the task. 4. The experience rests on a set of foundational skills that are assimilated below the level of conscious thought. Performance in any complex task contains a great degree of variation, even though this may not be apparent to an outside observer. For the athlete, changing humidity, lighting, or other environmental conditions will play a part in performance. An artist may encounter materials that have slightly different properties due to temperature or composition. Peak performance does not proceed in an unerringly straight line. There is no perfection, even though it may appear so to the outside observer. Constant and subtle adjustments have to be made. Good performers in the flow state make these adjustments easily and naturally. This is possible only because the task offers a constant stream of feedback. Outside stress can jeopardize the flow experience. Performers in the flow state must be confident that they can handle whatever challenges the experience will throw their way. Figure 11.1 on page 142 of the PDF shows a chart adapted from Csikszentmihalyi's Finding Flow, that considers performers' state of mind at the intersection of their skills and the challenges of the task. In the lower left quadrant, skills and demands are low, and the performer simply does not care about the task. This is the plight of an office worker who might describe the job as trivial and meaningless. If challenges increase without a commensurate increase in skills and abilities, moving along the vertical axis of the chart, the performer's stress increases as they realize that they are facing a task for which they are ill-suited, and that at some point they will be unable to accomplish it. If skills increase far beyond the challenges present, results may suffer as the performer could actually be too relaxed and comfortable. Interesting things start to happen when extremely high challenges are met with correspondingly high skills. It is here that the performer starts to have the potential to slip into the flow experience. In my experience, peak performance, the kind of performance that facilitates flow, rests on a strong foundation of completely assimilated skills. The artist has held a brush tens of thousands of times and understands the complexities of paper, paint, and moisture. He has mastered brush strokes and color to the point where they are tools that he can draw upon without conscious thought. The master musician has assimilated the technical requirements of her instrument through tens of thousands of practice sessions spread over many years. The expert rock climber seems to have a sixth sense, drawing on a deep understanding of torque, kinesthetics, and the properties of different types of rock that comes only from long experience. The trader has seen enough market action and has done enough statistical studies to know what usually happens when a market closes very strongly 3 days in a row, with a wider range the third day. There is nothing remarkable about any of these skills taken individually, but their deep assimilation into a whole that seems to be greater than the sum of the parts is one of the hallmarks of mastery. Figure 11.1 also shows why the flow experience can act as a powerful guide for learning and skill development. Being in the flow state is highly desirable. It feels good, and we perform well in this state. Being in that space becomes its own intrinsic motivation, and we will naturally do whatever is necessary to return to the flow state when we are pushed out of it. Imagine that you are in the area of the graph where your high skills are meeting moderately high challenges, but not sufficient challenges to fully absorb your attention. In this case, the performer can get back to the flow state by adding challenges and increasing the complexity of the task. Similarly, if the performer is in the space where high challenges are met by skills that might not quite be up to the task, increasing the level of those skills will move the performer back into the potential flow zone. It takes energy, attention, and focus to achieve this flow state, but its presence can be a powerful clue that the performer is in an optimal state to learn, to grow, and to develop new skills. The role of attention and focus. In the normal world, our minds are usually scattered. It is not unusual to be doing a task and to be thinking about several other things. In fact, multitasking is considered an asset in many professions. The problem is that we have only so much mental bandwidth, and it is hard to draw a line between multitasking and being distracted. There is the risk that when we focus on many things at the same time, we will do many things, but do nothing well. Part of the beauty of flow is that we are completely focused when in this state. In fact, one of the mechanisms that have been proposed to explain the flow state is that it occurs when all available cognitive capacity is focused on a single point, a most unusual state of mind in our daily lives. This state is not unfamiliar to meditators and religious aspirants. Many of the world's religions include a practice of repeating a mantra, a short phrase or prayer, over and over until it completely fills the field of awareness, and much of the conscious mind shuts off. Mystics have reported that this is one route to achieving enlightenment, and that a sense of religious ecstasy often accompanies this practice after many hours or days of this kind of focus. In the East, elaborate mandalas were created as aids to meditation. By focusing visual attention on one part of the image, the meditator was again able to enter into a state of higher consciousness. In yet another example, many meditative techniques revolve around ideas like focusing attention on a part of the body or on the breath as it goes in and out of the body. Again, this is designed to achieve a single point focus of attention. One of the prerequisites for achieving flow is absence of distraction and complete focus on the task at hand. Whether this is evening chart review or screen time during the day, structure your environment to minimize distractions. Turn off the television, avoid internet chats, do not check email, and sequester yourself physically. It is important to do all of this with the right mindset. Flow cannot be forced. You cannot try harder and work competitively to achieve the flow state. In fact, it flourishes in an almost playful environment of open-minded wonder. So it is not by chance that this is also the environment that is most conducive to learning and skill development. When we are in this state of flow, we are at our best, and our trading becomes something greater than the sum of the individual skills and parts. Practical psychology. Much has been written, here and elsewhere, about the psychological issues traders face and the right mindset with which to approach trading problems. This is a complex subject because traders at different stages in their development will have significantly different challenges and needs. Different personalities will deal with the stresses of trading in significantly different ways, so solutions that might have relevance for one trader might fall well short for another. It is dangerous to make sweeping generalizations. Psychological work is no substitute for actually having an edge, and proper psychology is not an edge in itself. No matter how hard you try, how much you focus, or how much you practice, you are not going to be able to flip a fair coin and make it come up heads more than about half the time, which is essentially what many new traders do. Many new traders are trading methods and ideas in the market that do not have an edge, and rather than rectifying the real problem, they focus on the performance insights of trading psychology. Much of the time new traders spend on psychology would be better spent understanding the true nature of the market's movements. For developing traders, though, the situation is different. Once you have a method that has an edge in the market, it is impossible to apply that edge without having the proper mindset and attitude. Traders find themselves making many strange mistakes that compromise their results, and these are often due to psychological issues. Dealing with the psychological stresses of trading is one of the core skills of competent discretionary trading, and it is something that requires ongoing maintenance throughout a career. No one is ever immune to psychologically driven errors. For more experienced and developing traders, it does make sense to focus on this area, perhaps even seeking the help of a qualified professional in the field. Most of the suggestions that follow are for the self-directed trader working alone or in a team and, ideally, with a mentor. For institutional traders, portfolio managers, and quantitative system designers, your situation may be different. You will still be inclined to make these same errors, but the constraints of your job or the institutional framework may define your role well enough that your behavior is restricted. You may still find insight in understanding the issues self-directed traders face, because these reflect the psychology of the market and price movements at important inflection points. Develop an approach that fits your personality. Who are you? It has been said that if you don't know the answer to this question, the markets are an expensive place to find out. This is true, and many millions of dollars and years of people's lives have been wasted because they were trying to trade methods or markets that were a poor fit for their psychological makeup. One of the secrets to managing yourself psychologically is to pick a trading style that plays to your strengths. So, once again, who are you? Some people make decisions intuitively and quickly, while others tend to prefer long debate and a careful weighing of all relevant factors. Some traders are naturally inclined to be more aggressive and active, while others prefer a more sedate pace. Some developing traders have serious constraints on their time and are not able to monitor markets intraday. whereas others can sit at the screen every minute the market is open. Some traders may have backgrounds and experiences that make certain markets more interesting or attractive to them. For instance, a trader who grew up on a farm will probably have natural inclinations toward agricultural markets that might be alien to a trader with a strong background in accounting and corporate finance. Every piece of their trading methodology and trading plan must be shaped by who the trader is. Choose a market. The choice of which markets to study and trade is an important one. Many retail traders are drawn to foreign exchange, but this is probably because of the extremely low account balances required to open a Forex account. This is also unfortunate because the Forex markets tend to be the most random and least predictable of all the major markets in many time frames. It is difficult to derive a quantifiable short-term edge in the currency market. One reason might be that a lot of the activity in the Forex markets is driven by a complex web of factors, and much of the activity in these markets is secondary. Futures are also problematic for many new traders because even with many contracts, considerable risk capital is needed to navigate these markets. A stock trader might be able to start trading and using odd lots are less than 100 share lots, might be able to limit her entire risk to $10,000, risking perhaps $50 on a trade. It takes a long time to lose $10,000 in $50 increments, which is exactly how the beginner should be thinking. For most futures traders, $50,000 is probably a realistic initial risk to allocate to their learning period. Many traders are drawn to stocks because they come from investing backgrounds, and owning stock is intuitive. But these traders are at a disadvantage because shorting stocks also needs to quickly become intuitive. Choose a time frame. The primary question here is, do you want to day trade, swing trade, or invest for the long haul? Details of whether you want to use 10 or 15-minute bars are considerably less important than this big-picture time frame decision. There are advantages to day trading, especially for the new trader. A swing trader might see a few hundred patterns in a year, but a day trader will see hundreds in a single week. The immersion and focus on pattern assimilation can result in a greatly accelerated learning curve, provided the trader can enter into the right psychological state to take advantage of the opportunity. In addition, the more times you apply a statistical edge, the more consistent and larger your profits will be. No other time frame offers as many at-bats as day trading does. However, the costs and challenges of day trading are severe. The impact of transaction costs alone presents an insurmountable barrier for many traders. For instance, imagine a trader with a $250,000 account who does 10 trades a day and who likes to trade stocks in the $150 to $200 range that might have, on average, 5-cent spreads. Furthermore, assume this trader pays $0.001 commission per share and no exchange or electronic communication network, or ECN fees on balance. These are extremely favorable assumptions. Last, assume the trader consistently bids or offers for his exits and enters trades with market orders, so he is paying the spread on 50% of the shares he trades. If he does 10 trades a day on 1,000 shares, transaction costs will total $502 a day, meaning that he has to make about $126,000 a year just to cover costs. This is a 50% annual return, again, just to break even. To put that in perspective, the Renaissance Technologies Medallion Fund, widely considered to be the best of the best, has averaged an annual return just under 40% since its inception. Traders and funds that can make 25% a year are rock stars in this industry. This is a tremendous vig for the new trader, so consider this carefully. The other issue with day trading is that the psychological demands are extreme. Day traders ride the complete emotional roller coaster from euphoria to despair usually several times in a single trading day. Unless you have the emotional control of a Buddhist monk, day trading will play on every psychological weakness you have, and you will frequently find yourself under a degree of stress that challenges the open receptiveness needed for optimal learning. I am not saying that no one should day trade, but you need to be aware of the costs and challenges of this type of trading. On the opposite end of the spectrum are long-term investors who intend to hold positions for years. For many of these players, a month is a short time frame, and they consider anything on the weekly chart to be pure noise. At this level, infrequent trading and position adjustment become barriers to the trader who needs to assimilate patterns and to learn to make decisions. It is not that technical patterns do not work in the long term. The balance of mean reversion and range expansion is a little different in some time frames, but technical tools retain their validity even at long time horizons. The problem for the long-term investor is that you will not get to see them work very often, and it is difficult to build intuition about the market's movements if you are making only a few decisions a year. In the middle of the spectrum are the swing traders. Properly, the term swing trading does not define a specific time frame, but rather a specific style of trading, looking to target and to profit from one specific swing in the market, usually the next one, while tolerating as little pain as possible. A swing trader will attempt to position long as the market turns into an uptrend, and will usually not be interested in sitting through retracements in that trend. Some swing traders may aim for holding periods of 2 days to 2 weeks, while others may look to hold for 2 weeks to 3 months. And still others may focus on swing trading hourly charts, with holding periods ranging from a few hours to 2 days. For many traders, the swing trading approach in an intermediate time frame of several days to several weeks offers an excellent balance. Trading is frequent enough that learning takes place quickly, and most analysis can be done outside of market hours, minimizing the decisions that must be made under pressure. This has the dual advantage of allowing the trader to enter into an open, receptive state, while also allowing time for deep reflection and analysis of the patterns being considered. Choose a style. Though there are 1,000 subtleties to a trading style, and every successful trader creates a style that fits some key elements of his or her personality, there are 2 key questions to consider. Are you a trend follower or a counter-trend trader? And do you want to be a scalper or hold for bigger moves? It is impossible for a new trader to answer these questions without some exposure to markets and to the actual trading process. The answer may change for a trader at different points in a career, but finding the
Not
answers
going
to these
above
questions is
VWAP.
a key part of knowing who you are as a trader. As a group, most traders have strong personalities, are opinionated, and are contrary to the extreme. As a result, they also tend to be distrustful of consensus and groupthink, and most traders find that fading,
It's
going
going
against
lower.
moves, comes more naturally than following the trend. In addition, there is a tendency to regard markets that have made large, sudden moves as being mispriced, either on sale or ridiculously overpriced.
This kind of is like a
However, traders who would focus
kind of is a
exclusively on
bull
fading
flag.
moves need to deal with an important issue.
There's a bear
With-trend
flag
trades
too.
are usually easier and offer better expected value than counter-trend setups. The most effective fade traders
Yeah.
lie in wait until markets reach ridiculous emotional extremes on the time frame they are trading, and then they pounce. This requires extreme patience, discipline, and maturity. If you go into the market constantly looking for opportunities to fade, you will find them, but you will often be steamrollered as markets simply keep going. The crowd may be dumb, but they are often right, and trends can go much further than anyone would expect. There are advantages to trend following. With-trend trades tend to be less transactionally oriented, and it is possible for a single successful trend trade to make many multiples of the amount risked on that trade. However, trend traders will accumulate many
it's
small
gonna take
losses
me out.
while they work to find the one market that will trend.
Damn.
It certainly is a viable strategy, but it is not the answer for all traders. There are strong statistical tendencies for mean reversion, and traders working a disciplined approach to fade trades may find that they can achieve higher returns and more effective deployment of capital,
Damn.
albeit at the expense of much harder work and many more transactions.
Just gave back that.
Scalping
Damn it.
refers to a style of trading that focuses on a large number of very small trades.
It's like I'm
We
done.
usually think of this on very short time frames, but it is also possible to scalp on a daily or higher time frame. The key is simply that the
Plus
expected
300.
profit or loss is a very small percentage of the average sized move on that time frame. Scalpers are exposed to very high transaction costs and are rarely involved for the big swing. Scalpers may take 5 cents out of an intraday swing that moves 2 or 3 points. So, why scalp? The best answer is that some people and some personality types are good at scalping, and it can offer these people consistent profits. If you believe you want to be a scalper, realize that these edges have been significantly eroded in recent years by more efficient market microstructure, and the game could well be completely over for the human trader within the next decade.